Very excited that our metals complex have reached over 2.8 million contracts traded just in October 17th. We had our previous record being done just a week before on October 9th. It's really mainly driven by our momentums around the precious metals, gold, silver, and PGMs as well. It's been really driven by the momentums and excitements and participation coming from the retail audiences. We now have 100 ounce, which is our benchmark product, but micro contract, which was launched about 10 years ago. It's a 10 ounce contract. And then January of this year, we launched 1 ounce contract, which is 1/100th of an ounce of our benchmark. And all of those contracts have hit their record highs. This has really been about our efforts to continue to broaden and lower the barriers to entry for our retail market participants.
What is the role of the micro gold and silver futures in broadening market access?
This year, the gold has been the best performing asset. Gold has gone up over 50% since the beginning of the year. So if I think about the 100 ounce or benchmark contract, the notional value of that is easily over 400,000 400,000 US dollars. Now, if you size that to 1/10 of a contract, 40,000, and then 1 ounce contract being about 4,000. So again, I think if you think about the margins around that 1 ounce, now you can access those markets with a couple $100 per contract. Again, if you are a retail investors, that makes it a lot more accessible than, let's say, our benchmark 100 ounce contracts at $20,000 of margins. We've also actually starting to see more momentum building with our institutional investors on our micro contract as our notional value continue to increase on our benchmark products, that we're starting to see more of that micro contract being used to really tailor the risk management tool, round up the errors in our micro contracts as well. So it's been a very popular tool for both institutional and retail audiences, but I would say that smaller contracts definitely have more popularity with our retail audiences.
Are these contracts fungible with each other?
They are for physical delivery on micros. So our micro contracts, actually, you can use the ACEs mechanism, which is basically you can collect the 10 contract and then move it up to our benchmark contract. And then in 1 ounce, it's really just a cash settle, but it's very much of a following the settlement of our 100 ounce contract.
What are the main risk challenges in precious metals derivatives with today's geopolitical shifts?
There's been a lot going on this year, right? Whether you're talking about interest rate, the inflations, geopolitics. And I think that one of the biggest driver for, momentum in precious metals, I would say, has been a central bank policies and continuous buying from the central banks as well. Where we really focus on is the integrity of the market and round the clock liquidity. So no matter where you're sitting around in the world and what time of the day that might be, you're basically getting same types of transparency and liquidity that CME provides. And I think the gold is a very much of a gold standard of that in our gold contract. We've had, obviously, in the very beginning of the year, challenges around the tariff and uncertainties around tariff which brought significant amount of gold into the New York vaults. And we are actually, in fact, setting it almost at record high in terms of the volume for the inventory level. But having said that, our markets have really operated smoothly, performed exactly as it's designed. And that's what we're exactly seeing, is that the momentum of that round clock liquidity continued to build. This has been very much the case for gold contract, especially this year, that more than 50% of our volume and revenue gets generated by non-US clients and non-US hours.
How do gold warrants work?
At the end of the day, our contracts are physically delivered in commodities. Many of them are, especially when it comes to our gold, silver, and PGM contracts. So when you're warranting something, that means you're bringing the gold into our facility and getting it ready for delivery, whether you're taking in the delivery or taking out the delivery. Now, otherwise, it's sort of the dead asset just sitting in there. And what gold warrants as a collateral provides is that you're able to use that against your collateral requirements instead of putting off the cash. So gold warrants is basically a electronic certificate that backs your physical. And again, used to really converge the physical spot market to the futures market. Is a very important tool to converge those two. And gold warrants is basically the one that we use to help with that physical delivery aspects of it. Again, can be used as a different tools, and it's been a very popular tool to use as a collateral, just to given that we have record amount of gold moving into our New York vault, given some of the uncertainties around tariff initially in the beginning of the year, this kind of a high interest rate environment, being able to free up your cash and use gold as a collateral has been a big help for the market participants.
What are the recent trends and opportunities in battery metals futures?
The battery metals is one of the new sort of areas that have been developed in commodities. And as you know, in commodities, not that frequent that you have sort of these new suites of commodities that are developing. And I would say that battery metals is one of those rare sort of incidences with energy transitions and other things going on. There's this whole new sets of different types of critical minerals and things that you normally see on your chemistry chart that is really starting to become in demand and volatile. And therefore, the need for price risk management really rises. And, we launched our very first cobalt contract in December of 2020, despite us looking at this market and observing for a long time. We felt that was appropriate time for it to launch because there's enough demand for wanting to hedge and wanting to take the other side, really simultaneously developing. Since then, we have become the venue of choice for managing battery metals risk across the supply chain. And we have seen a growing community and traders moving into this space. So we're very excited about that. Since launching it in December, with the cobalt contract in 2020, we now have over 6, 7 different types of contracts, including lithiums, carbonate, all the way to spodumene. And we're really excited to the growth that we're seeing so far. For example, in lithium, we have seen our volume and liquidity triple to this year. Our open interest continue to grow as well. And so are the cobalt, now open interest going all the way out to 2029.
How is the CME Group addressing growing client interest in industrial metals?
PGM actually, so platinum and palladium group have been in a bright spot for us this year. Last year, in fact, had a record year, and then this year is up 40% from that. So we've seen a significant momentum building on our PGM spaces. I think part of it is that people are looking at gold and silver, who's been very strong over the years, and then we're looking at sort of adjacent markets. So platinum and palladium certainly be part of that. But also, as you mentioned, John, it has an industrial characteristic when it comes to platinum and palladium, are very popularly used in, engine combustor engines for automotives as well. So I think there has been a different types of a view on that, meaning that there are market participants taking the other side of the energy transition, saying that it's going a lot slower than what market has initially expected, and they're expressing their view through PGM as those demand are continue to increase or there to stay.
What innovations are CME planning to enhance its metal business?
So I would say there's 3 things. Number one is continue to lower the barriers to our retail audience and continue to, broaden our reach to the mass retail. Number two is continue to increase our industrial metals presence, especially through the regional pricing force, as our client dynamics that they have to navigate, whether you're talking geopolitics or other things, have really switched. And then number three is continue to, increase our global reach, given again, as I mentioned earlier, the metals being one of the most global asset class at CME. Our dynamics in metal space is very global and international in nature. So us continue to expand our footprint on that would be important. 1 ounce contract was a great example of us continue to innovate and continue to cater to that new mass retail audience. And in fact, CME also just announced our deal with FanDuel and sort of going into that prediction market as well as 24/7. So I think you're going to see us continue to do more of those in line with really us to go directly broaden our access and scope in a retail audience.
Can tokenization be used in the metal market?
CME Group did announce about, our moving things forward with the stable coin and whatnot. There are 2 sort of components with the gold. Number one is that a lot of market participants get into the gold because it's untraceable. And so there's investors that prefers gold because of that aspects of it. But having said that, I think gold can be a very valuable tool in terms of tokenizing and be able to, use as a sort of the semi-currency as well. And that's a great one to sort of first to tokenize if we're to do that in commodities. Really focus on the value on is what problems or client needs that we're trying to solve. Currently, we're looking at that and trying to figure out how the best way to position it versus just getting it out to the market for sake of getting it out to the market.